Hello, happy new year and welcome to the first look ahead for 2024. Looking ahead to Thursday, the 4th of January with me, Fiona Cincotta, Senior Market Analyst at City Index. So kicking off tomorrow, there are some earnings to be watching out for. In fact, one that will be one of the major earnings we'll be watching for is Walgreen Boots Q1 2024 results. Then as far as the economic calendar is concerned as well, that's pretty ramped up pretty quickly. We've got some several numbers to be watching out for tomorrow, including the Chinese taxing services PMI that came in at 51.6 previously. And obviously the level 50 separates expansion from contraction. Now this comes after the manufacturing PMI yesterday, which actually came in a little bit stronger than expected at 50.8. Now, concerns over the health of the Chinese economy has been a big driver in 2023. So investors will be watching closely to see whether these figures come in ahead of expectations or not, and whether the recent stimulus measures are having the desired effect. Also on the calendar, we'll be watching Eurozone PMIs for December. These are the final readings, so don't tend to be as market moving as the preliminary readings. The composite PMI is expected to come in at 47, down from 47.6 in November. And the services is expected to fall. That's what's making that fall in the composite, down to 48.1 from 48.7. This data comes after the manufacturing PMI yesterday, which actually was slightly stronger than expected, but still very weak, well below that 50 level, around the 44 level. We'll have a look at what that's doing with euro US dollar shortly. But just wanted to mention first the UK services PMI data, which is also due. That's the final reading again, expected to come in confirming that preliminary reading of 52.7, which was much stronger than expected, up from 50.9 previously. Now, this data helped really boost the pound towards the end of last year. It sort of helped revive expectations that the Bank of England may need to keep interest rates high for longer in order to tame inflation. Now, let's just have a look at though what's been happening to the pound since. So we can see the pound did rise up at the end of 2023 to above 128. I think it was around 128.30, but it has been falling sharply since. We've seen it fall below that 128 level. It's also taken out that the 20 SMA around the 126.50 level. Now we're seeing it test support at 126. This is quite an important level of support. We can see that it was a support level in mid-December as well. And if we see that support broken, then that exposes the 200 SMA at 125.30, ahead of that 125 round number. Now, any recovery, should we see that 126 level hold, then buyers will look to move back above the 20 SMA and up towards the 128 level. But that's probably going to be dependent on some strong data from the UK or some weak data from the US. So just moving over now to the economic calendar again, we've got German inflation data, which is expected to rise after falling to 3.2% previously in November, expected to kick up to 3.8%. Now that will be quite interesting because we've seen obviously Eurozone inflation has fallen to 2.4%. This is the Eurozone's largest economy. So it might sort of suggest that the Eurozone inflation data, which is out later in the week, will also be ticking higher. Now we've seen the market is expecting the ECB to start cutting rates quite aggressively across 2024, but the ECB have really pushed back against those expectations, really trying to suggest that they might not be aggressively cutting rates as the market seems to think that it will. Now, what does this mean for the euro US dollar? Now, euro US dollar, it has fallen below 110. We can see it's been selling off quite sharply. This is also a function of USD strength, which we've seen in recent sessions. I'll come to that shortly. But yeah, so the euro has taken out that 110 level. It's heading towards support at 109, which is the mid-December low. Now, if we do see a break below that level, then it exposes the 200 SMA at 108.30. Below here, we'll be looking for that 107.50 level to be tested. Now, should we see that the 109 level holds, and we could see a recovery above 109.65, that's the daily high today. Above here, that will bring that 110 level back into focus. Now, I mentioned there about dollar strength being playing quite a part here. Now, obviously last year the US dollar index fell quite strongly. It fell around 2% versus its major peers, on expectations that the Federal Reserve will cut interest rates aggressively across 2024. Now, as the new year has started, we've seen those rate cut bets being reined in. They were looking a little bit overdone. You know, you've got the market pricing in around 6 rate cuts across 2024, whereas the Fed's been saying that it's going to be looking to cut rates around 3 times. So you know, there is quite a difference, and there is some reconciliation that needs to happen there. And that sort of that reining in of Fed rate cut bets has driven the US dollar higher. And it's really interesting. I mean, tomorrow, sorry, just before we have a look at the chart, we do have further data. It'll be the ADP private payrolls. They're expected to come in around 205,000 versus 203,000 in previously in November. Jobless claims are also going to be in focus, looking to be around 216,000. So still relatively low after being at 218,000 previously. We had the JOLTS job openings came in today. They were higher than expected. So we are still seeing that strength in the labour market. Obviously, this comes ahead of Friday's non-farm payroll reports. Now, I think a really interesting one to be watching has been gold. Now, gold is down around 1.2% today. It's fallen to a 2-week low, down around the 2,033 level. It's just testing the 20 SMA as we speak. If we do see a break below that, that brings that 2009 level, which was the October high, into focus. That's going to be a pretty key support there. Now, if we do see that the 20 SMA holds, any recovery, buyers are going to be looking to get back above the 2050 level. That was the November high. And if we get above that, then that brings that range of 2075 to 2085 back into target. So that's all from me. I hope you've liked what you've seen. If you have, please give me a like. And if you would like to receive more videos like this, then please do subscribe, and I'll see you tomorrow.